LTC Properties Stock, another monthly dividend paying REIT that is very popular among dividend income investors. But what's the catch here, you might ask yourself? And who doesn't love a 6% dividend yield and monthly payouts, right? Well, for starters, LTC stock had a 12% return in the past 5 years, including this juicy dividend. And depending on your strategy, this could be a potential problem, of course. But for pure income players, it doesn't really matter that much. And year to date, the stock is actually doing an amazing job with 18% return. So this begs the question, is LTC stock a buy at current prices? Let's dive into the earnings results and do a full analysis on LTC stock. On the 28th of October, LTC reported earnings where they beat on both the revenue and FFO by a decent margin. Looking really good to me so far. Diving a bit more into the numbers, we see that revenue was reported at 55.7 million. Double-digit growth numbers here year over year. The net income is also looking really good with a 30% increase year over year. EPS is following this same trend. The FFO, one of the most important numbers with REITs, is also up a decent amount. So we're off to a great start. And LTC is really focusing on investments in the recent years, which contribute to higher revenue growth. And LTC is a really interesting REIT. About 63% of the portfolio is owned, which collects rental income. About 17% is owned property, where they collect interest income, which attributes only 10% to the revenue. Mortgage loans also represent 17% of the investments, but 22% of the revenue, with also interest income. Looking at the property type breakdown, we see that there is a high focus on assisted living and skilled nursing. This is a really niche focus in my opinion. And in total, LTC has 29 operators in 25 states, with 191 properties. And this diversification looks pretty good to me. Texas is the biggest state, with 30 properties, which represents 15% of the investments. Second is North Carolina, and third is Michigan. All three above my 10% maximum here, so that's something to keep your eye on. Another really important number for me is the debt to EBITDA. I prefer a range of 5 to 6.5, and LTC is currently sitting at 4.2 times, so there is some room to expand here. But for now, it is not looking too bad. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. LTC is a 1.7 billion market cap company. P/E ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. And right now it is sitting a little over 14, indicating they might be undervalued. Later in this video I will show you my 3 price targets for LTC stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 207 million, and in this graph we see that revenue went up in the long run. To me this looks really good, especially for a REIT. During lockdown periods revenue was slowing down a lot, which makes sense of course. We see that margins are going up and down over a longer period of time, but the trend line is a bit more downwards, which is something that I don't like. Definitely keep an eye on this number. The good part is that in the recent quarters it is increasing again. EPS is pretty much the same story as the margins, so keep an eye on this number as well. Analysis expect that in the coming years EPS will decrease even further. To me, this also doesn't look good. For the revenue, it is looking pretty bad, with almost no growth expectations, so this worries me a bit. Return on assets is sitting at 5.4%, which is a decent number. Return on equity is looking great at nearly 11%. And the most important number, return on invested capital, is sitting at almost 5%, which is again a decent number. And it is slightly higher versus the 5-year average, so that's also nice. Current ratio is at 11.6, which is way too high in my opinion. This is definitely something to keep your eye on, because you want this number in the range of 1 to 3. For now, this is a red flag. Especially if we take a look at their debt levels. LTC has 785 million in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. LTC has 35 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like, especially in combination with the current ratio. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up and down in the long run, which is very common for REITs, but I still prefer a bit more steadier pattern here. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 6%, which is a great number. Annual payout is at $2.28, and payout ratio is at 84%, which is above the 75% average for REITs. The 5-year growth rate is sitting at almost 2%, which is a really low number, and there are no consecutive years of dividend increases. And that is also reflected in this graph, where there is no dividend growth anymore since 2019. To me, this is not a good sign. In this graph, we see the expected dividends in 2024, 2025 and 2026. Of course, this is an estimation that can be highly impacted by results, but it gives you a rough indication. It's expected to stay flat from here as well. And overall these dividends look really interesting to me. But how about the historical returns? I decided to compare LTC stock with the overall market, in this case the S&P 500. Next to that I added MPW and GMRE. On the 5-year chart we see that LTC returned 10%, which is significantly lower versus the S&P 500, which returned 103%. And keep in mind, this is including dividends. MPW is looking really bad at minus 70%. And GMRE isn't looking any better with break-even numbers. On the 1-year chart it looks very interesting, with a nearly 25% return for LTC. But somehow the S&P 500 still managed to beat this return with 32%. Both competitors are looking terrible again. On the 6-point chart it is LTC who actually managed to beat the S&P 500 with a small difference. And again, competitors are lagging behind big time. On the 1-month chart it is again LTC who is beating everyone in this list. Both competitors have a massive negative return. So bottom line, LTC underperformed the S&P 500 in the long run. But in the short run, it is actually looking pretty good for this stock in terms of momentum. So could this be the perfect time to buy LTC stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets. Starting off with revenue growth. For the revenue growth I'm filling in 2, 4 and 6%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 46, 48 and 50%. And for the free cash flow margin I'm putting in 54, 56 and 58%. For the PE ratio, I'm putting in 20, and for the price to free cash flow, I'm putting in 12, 14, and 16. My desired annual return is 12.5% since I get an easy 10% average annual return with owning an ETF. Right now, LTC stock is around $38. I hit analyze, and we see a lot of red numbers. And since this is a REIT, I'm only focusing on the discounted cash flow value. We have a low price target of $26. We have a mid price target of $33, and we have a high price target of $41. To me, the mid price target is the most justified here, indicating that this is kinda in the middle of this range, and actually leaning a bit more to the higher side. Which price target do you think is the most justified here? Let me know in the comments down below. My final conclusion on LTC stock is that it is an interesting company. They have an interesting niche focus, and there are a few parts that I really like about this company. But there are also a few really big concerns. For starters, their debt isn't looking too good in my opinion, especially in combination with the current ratio. Looking at the margins, I'm also a bit disappointed. It is recovering right now, so that's at least the silver lining here. Dividends are looking amazing, with the monthly payouts and a high dividend yield. However, the fact that dividends aren't growing at all is something that again worries me a lot. Down the line, the valuation is indicating the stock is kinda fairly valued, as of right now. And taking into account all the other things, I think it is wise to say to skip this stock because there are better options out there. Nevertheless, it is an interesting company and I will keep analyzing them from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and that did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.